Good morning, you're watching Businessworld Live. I'm Danny Laurel. It's 9:30 a.m. this Wednesday morning here in Manila. Trading has just started. Let's go straight to our top story. The country's factory activity dropped to a three-month low in the month of August amid Metro Manila's return to a modified enhanced community quarantine or MECQ lockdown. The IHS Market Philippines Manufacturing Purchasing Index or PMI fell to 47.3. That's from 48.4 in the month of July. August was the sixth straight month of falling factory output. A reading below 50 signifies contraction, while a figure above 50 indicates growth. IHS Market attributed the decline to a plunge in new orders over stricter quarantine rules in the capital region and neighboring provinces in the first half of August. The reimposition of the MECQ affected demand last month. That's as some businesses had to slash operating capacity. The Philippines posted the second lowest PMI reading among 6 ASEAN countries. That's just behind Vietnam and below the regional average of 49. IHS Market also said that job losses remained apparent as businesses tried to adapt to the new economic environment. It also noted that stocks were reduced, extending the run of depletion to 6 months. Security Bank Chief Economist Robert Dan Rosa says the decline in PMI is relatively small, explaining that the MECQ lasted for only 2 weeks. He says there is a high chance that the PMI could bounce back near or above 50. That's as Metro Manila is now again placed under GCQ until the end of September. Kicking off on the optimistic front as I open my Bloomberg terminal here with you guys and take a quick peek at how Wall Street had performed overnight. You can see even more euphoria here. Take a look at the NASDAQ. That's up by 1.4%. So again, tech shares advancing, investors snapping up, in particular work from home winners. So those were the winners yesterday over in Wall Street. But even the benchmark index of the US S&P 500 up by 0.8%. The US manufacturing data, came as well. And that's just right after China factory data signaled a rising global demand for exports. So a bit of a sign that the world economy is recovering from the pandemic. Meanwhile, in the US, manufacturing, unlike here in the Philippines, had actually expanded last month at the fastest pace since 2018. And you can actually see that global stocks are continuing that uptrend, and investors still anticipating more support from policymakers, especially with last week's announcement from the Federal Reserve saying that the central bank will be maintaining an easing monetary policy, adding fuel to all of that trade. But you can take a look at Asia. We are actually opening in the green, at least for the rest of the region here. This amid Bloomberg Economics still saying that Asia is seeing a rather uneven recovery from the COVID-19 recession. So what is going on here? It's a very mixed picture according to Bloomberg Economics. The leading indicators suggest a steady rebound in China. Australia has seen a strong recovery so far, and other economies have logged improvements. Still, which ones are the economies suffering setbacks, apart from, of course, the Philippines as well? India and Vietnam have suffered setbacks still. You've got also them saying that even as Asia's central banks have pulled out all of the support, there's been a slashing of interest rates across central banks in Asia, even venturing into unconventional monetary policy. Nevertheless, the pace of the new policy easing has now slowed. The cases in Asia are still continuing to pick up. So we actually had 80,000 new cases in the region in late August. New cases in India continuing to rise. That's more than 3 million cases in India. Indonesia's situation is still deteriorating. South Korea as well is again at risk of a massive outbreak. Now, which are the economies that have tried to get out of this difficult situation? Japan may have actually improved significantly. You've also got, I had already mentioned Australia, but Hong Kong is now seeing the daily cases fall to a low double digits towards the end of August. So we're more than 100 earlier in this month. So a lot of things still in focus here when we talk about the pandemic. But as you can see on my terminal, it's actually a sea of green. But let's take a quick peek at how we are opening this hump day. Whether we are continuing that course doesn't seem to be the case. Take a look at that. We are now sliding to 5,700 levels. We haven't really seen that in a while. We're down by 0.4%, continuing that pain that we saw yesterday when our index actually closed down by 1.4%. We had been trading mostly in the green earlier on, and that completely recovered as investors started digesting the meaning of a GCQ until September 30, but also the PMI activity or the manufacturing activity based on the PMI index going down. So this is the longest losing streak we've seen in 5 weeks. We've now lost 2.6% of the index value in just 4 days. Now, what is going on when we talk about the GCQ? Curfew hours are actually going to be shortened. So it's now going to start at 10 p.m. instead of 8 p.m. There's a little bit of more easing compared to before. Public transport, for instance, continuing to operate at half capacity. And this on the back of Health Secretary Duque saying that the doubling of cases here in the Philippines has slowed to 12 to 13 days from the initial 7 days when it was reimposed in early August. Now, another thing that Jonathan Ravelas of Video is saying is that our index actually played catch up with the losses in the region on Monday. Recall that we were on a holiday on Monday, and yet we still see foreigners net selling here. We saw $5.39 million worth of shares being lost in our index. You can see that on my terminal here. That is the 10th straight day of an outflow, the longest streak of outflows we've seen in 5 weeks. Now, which were the biggest losers when the GCQ was announced? JG Summit, which is of course into airlines and food manufacturing, sinking more than 4.4%, followed by supermarket operator Pure Gold, which also fell by 4%. Now, let's take a quick peek at some stocks that are in focus today. Let's check out San Miguel. And this on the back of this issue on the tax perks under Bulacan Airport. You've got the House and Ways Means Committee actually saying that this is necessary for them to continue doing this project, but you've got the Finance Department opposing giving tax perks to unsolicited bids. And what is going on? Well, you can actually see more people starting to want more tax perks as well. You've got Chelsea Logistics, for instance, who has an unsolicited proposal to modernize the Davao Airport, also wanting to have the same benefits. This according to their CEO, Chris Damoy, saying if there will be such a thing, then chances are we will also be requesting for tax incentives. Another one that is also building an airport over in Cavite, that's the Sangli Airport, is the province of Cavite. Their governor, John Vic Remulla, telling Businessworld that he will be discussing this matter on tax incentives with President Duterte because every project should be on equal footing. So a lot of questions still going on whether this tax breaks will hurdle the Congress. Meanwhile, San Miguel down by 0.3%, trading at 100 pesos flat. Now, more on the airport projects and airport-related stocks, let's say. You've got Macro Asia here. Just quick check on that. After spokesperson Harry Roque had actually said that President Duterte will not be banning Chinese contractors from Philippine infrastructure projects. So recall, this comes after comments of our Foreign Affairs Secretary Locsin saying that this might be, a solution. We should be banning or ending deals with Chinese companies involved in the South China Sea reclamation. Now, which are the Chinese companies that have a stake here? Sangli Airport, as I had just mentioned, is also partly going to be a project with China Communications, and that's of course together with Macro Asia. And this, according to Harry Roque, that project will be pushing through. We need investors from China. Macro Asia up by 1.7% on the back of those comments. Now, I did want to take a very quick peek at our airlines today. That's also in focus as the GCQ continues. And as I had reported earlier, Asia is still seeing a very uneven recovery here. Malaysia is the latest to now ban the entry of Indian, Indonesian, and Philippine citizens, and not just tourists, but even those with long-term passes, students, expats, permanent residency, and family members of Malaysians. So this is all foreign tourists will also be banned. This has been happening since March, but now everybody will now be banned. Another one, though, that is trying to be optimistic, Cathay Pacific restarting their flights to Cebu. That's on the back of them still operating at skeleton capacity. Quick peek at our airline operators here, Cebu Pacific down by 0.6%. PAL as well experiencing some losses down by 0.01%. So more on markets later on in the broadcast. Okay, guys, I'm going to scroll through some of the biggest headlines we're watching. In the middle of the week, the Philippines is seeking a fresh $600 million or 29 billion peso loan from the World Bank to fund its cash aid program for poor families amid this pandemic. A big chunk of the loan will be used to fund the proposed 485 billion peso Pantawid Pamilya program, or the 4Ps, in the next 5 years. $580 million or 28 billion pesos will be used to support the cash handouts for beneficiaries. Now, more than half of this allocation will be immediately disbursed to 4Ps beneficiaries, while the remaining budget will be disbursed from the second year onwards. The remaining $20 million in the World Bank loan will be used to modernize payment delivery systems under the DSWD. Recall that the department has had problems in implementing government dole-outs under the Social Amelioration Program. Beneficiaries complained of technical inefficiencies and blunders back in the second quarter, as well as alleged corruption from the side of the local government, facilitating the cash aid release. The World Bank is expected to approve the country's loan request for the Beneficiary First Social Protection Project on September 15. The government's pandemic spending reached an estimate of almost 390 billion pesos. That's as of late August. The Budget Department reports that 54% of the total was used as emergency cash aid for vulnerable communities. In a briefing yesterday, Budget Secretary Wendell Abisado said the DSWD disbursed some 211 billion pesos for the Social Amelioration Program. SAP provided 2 months worth of financial aid to some 23 million families affected by the lockdown. The subsidy for small business employees accounted for 51 billion pesos, while the DOH took up some 48 billion pesos for the procurement of test kits and for special allowances and hazard pay for health workers. The DBM said they are also ready to release around 14 billion pesos to support the Bayanihan 2 bill. The country's retailers are now forced to adapt and innovate amid the faster growth of e-commerce and the higher demand for fast and reliable delivery. This is according to global consulting firm Bain & Company. The firm said the Philippine retail industry is barely adapting radical digital innovations and that its market is less mature than those in developed economies like South Korea and Australia. Bain & Company said Philippine retailers must now take advantage of these so-called digital disruptions brought by the pandemic by working on their social commerce and digital marketing strategies. They note that though there would still be brick-and-mortar stores, retailers should already prepare themselves for the next generation of store formats. Bain & Company also believes, though, that while technology is important, providing ultra convenience to customers must be at the heart of retailers' operations, especially with the denser urbanization and the rise of time-poor dual-income households in the Philippines. As we enter the last quarter of 2020, businesses are now realizing that the way we have been working right now is no longer a temporary situation. What's the next step in navigating a forever changed world of work? Here to share with us his views, we have Ajit Melacorde, Bumi's Vice President for Asia Pacific and Japan. Good morning, Ajit, and welcome to the stream.
Good morning, Danny. I have to confess, this is the first time I'm being interviewed by a PhD of finance and a professor.
Excellent. So it's going to be some fun. Now, you are going to enlighten us and our viewers here on what your services are, but also just a general view on how the world of work has been changed and what we should be expecting moving forward. Now, to kick off, just tell us very quickly what your platform is. How is it different from other cloud service providers? And what's your game plan during the pandemic?
Sure. I mean, we're all in this together in a way, in this pandemic, in the digital transformation that's coming. I've got to say, I saw the tough data you just presented. Tough countries and companies last, tough times don't. And Philippines is, certainly very, very tough. So I look forward to doing business in Philippines. Very simply put, I mean, Bhumi in many languages, many Asian languages means the earth, again, underlining that we're all in this together. We're the next iteration of the IT industry. We're the next stage beyond cloud. So very simply put, think of Bhumi as the Velcro that helps stick together data across divisions, data across teams, data across subsidiaries. Bhumi invented what is called integration platform as a service. It's a visual interface oriented, easy to use, almost self-help like platform to just help companies integrate. So you talked about cloud. A lot of the CIOs complain that they can't go to the cloud fast enough because they can't integrate fast enough between different cloud applications, like a Workday or an SAP. They can't integrate between cloud applications and legacy applications back in their data center. That's exactly what Bhumi solves with our integration platform as a service, our iPaaS. The other thing that you also referred to here is the ways of working have changed. So people are thinking, hey, how do I do integration if I can't get a lot of people on premises? How do I do integration between my teams, my different data silos, my different applications? How do I make digital transformation happen? If my travel is constrained, if my meetings are constrained, that's exactly what Bhumi and iPaaS solve. And we're the leaders in the industry. I mean, we invented this industry, more than a decade ago. We've got 12,000 plus customers, 35 terabytes and growing of anonymized data on integrations on which we apply artificial intelligence and advise customers, how to do their integrations, and more importantly, how not to do integrations. I mean, our philosophy is pretty much there is no digital transformation, without systems integration. There's no digital transformation without data integration. There's no digital transformation without applications integration. And Bhumi is pretty much at the core of all of that with our integration platform as a service. And as I say, we're the next iteration of that, IT industry journey, the digital transformation journey of what's next after cloud. How do we do digital transformation better, faster, cheaper? How do we use, a platform with a few clicks to disconnect our applications and, our data, our people, our teams, especially these days when budgets are constrained, and CapEx is constrained, and implementations are required really, really quickly. To give you a feel and to just, wrap up on Bhumi and what we do there, Danny, you could do an implementation with Bhumi across subsidiaries, across divisions, in a matter of days and weeks, sometimes in minutes, compared to the months that it previously took to do, systems integration.
Okay, let's jump off on that point. You're saying it has to be faster and cheaper, right? Was this not the case before the pandemic hit? That digital transformation should have been something that companies had already invested in already, and if they had done that, before all of these things should be moving much more smoothly now. Even the work from home should have been much better. E-commerce should have been much better. What was the bottleneck happening before, and is this bottleneck now being addressed right now?
That's a great question, Danny. I love it. Look, I want to take digital transformation right back to human beings and making it human. And you might be thinking, hey, what the heck is someone from a technology company talking about humans? But remember, at the back of IT, there are servers. And you've got to remember that a server is nothing but something or someone who serves. And I think anybody in the IT industry, whether you're on the client side implementing digital transformation projects, or whether you're someone like Bhumi with an integration platform, you've got to start with the human beings, at the end of the service. You should not chase buzzwords and jargon just for the sake of chasing them. I often go into discussions on digital transformation which go along the lines of, hey, we're going to put IoT out there. We're going to collect big data from our IoT devices. We're going to apply AI on it. We're going to connect it all with blockchain to make it trustworthy. We're going to host it on the cloud. And hey, magically, digital transformation. The other kinds of conversations that I have, Danny, is just doing digital transformation for the sake of it. And let me take a very example, this conversation that we're having. We have lots of debates, within our customer community, within our, 15, 20,000 strong, Boomi community, people certified on Boomi. What is fit for digital transformation? What are the right horses for courses? So for example, if I stretch this conversation, I could say, hey, I could bring a virtual world into your house and make it look like you're jogging in a park, put screens around your treadmill. I could bring your golf course to your house. You already have food delivered to your house. Everything's digital. You don't have to ever leave your home. Isn't that wonderful? And chances are you'll tell me,
no.
Don't think. So, you've got to, every company, every industry's got to very carefully evaluate their case for digital transformation. What is digital, what's not? You alluded to it. What's bricks and mortar and what's digital? What's the good mix between the two? And then how do you integrate across all of those? And in these times, pandemic times, what I most often hear from our customers is, we conducted a survey with an organization called Vance and Bourne. You alluded to the Bain survey. 1 and 2 big customers say that they're not innovating at speed. Depending on who you survey, between 40 and 55% say they don't have the technical skills to make digital transformation, happen. And you could ask, why is that the case? Again, going back to your direct question, why is it not happening at pace? You don't have the skills. People are lost chasing jargon. People are lost, doing transformations and just technically solving things rather than getting to the root of it. And that may be one of the reasons why, digital transformation is being needlessly slowed down. But I'm hoping that's what we're solving with the iPaaS platform, especially for a market like Philippines. Have an easy, clickable platform to connect apps, connect data, and make digital transformation a lot faster. The last point I'd like to make, Danny, is you probably want to split up digital transformation into 4 parts. One is just connecting business. So if you're doing M&A, the next is modernizing and getting to the next levels of technology usage. The third is transformation and doing the right things, doing things differently. And then the last is innovation. I would actually say that Philippines is pretty far ahead on the individual buckets, if you break it out that. So if I look at Globe Telecom, or if I look at ICTSI, or if I look at more traditional industries, pharma like Unilab, we've got some great winners out there.
Okay. Ajit, before I let you go, you mentioned already all of this jargon and all of these technologies, blockchain, IoT, AI, which were the buzzwords before the pandemic happened. And then the pandemic happened, and then there's been cuts and capex on all of these things, focus again on the basic needs. Given the country's, infrastructure situation when it comes to even broadband internet connections and data, what do you think are the key technologies that we need to be focused on right now, and that's going to drive our future, basically, and how we are able to get out of this economic crisis?
Yeah, so I'll go back to the humans. I would say remember the humans. When you adopt any technology, you've got to remember the humans at the end of the day. Digital transformation and technology projects should not be seen as projects to just be thrown at IT and as IT projects. The end objectives of what you're enabling for customers, partners, vendors always has to be kept in mind. Of course, I would say, adopting technologies like ours, like iPaaS, is something that you need to keep in mind because it abstracts away from any of the constraints that you have on broadband or infrastructure. So if you look at iPaaS as a platform to enable and speed up digital transformation, it can work on the cloud, it can work behind your firewall, on your premises as well. So you don't have to be constrained by infrastructure. It's already got AI loaded, which tells you how to integrate your data, how to integrate your applications, how to speed along your digital transformation journey. It reminds you that, hey, you don't have to be constrained by the skill sets that you're seeking on technology because we've gone what we call low code. We've gone what we've called jargon free. we've deliberately come up with a piece of technology that takes away the need to keep following this job, spend a lot of PhDs on technology. It's what we call citizen integration. Even the lay users can use our technology to speed up digital transformation. So I would urge companies in the Philippines, and as I said, I mentioned a few names in both the traditional sector as well as the non-traditional sectors, where I already see visionary CIOs, people like Carlo Malana, people like Frankie Ortega, Brian Hibbert, already digitally transforming their companies and industries, using a whole plethora of new technologies.
Okay, so again, the point here is focus on the human beings. Don't get lost in the jargon. We are actually well positioned as a country, despite all of the issues that we had reported earlier on, to take advantage of this digital transformation. Thank you so much. That was Ajit Melacorde Bumi, Vice President for Asia Pacific and Japan. Thank you, Ajit.
Thank you very much, Danny.
Okay, guys, I just want to do a very quick health check on the peso and how our markets are doing before I let you guys go. You can see on my terminal here how our local currency is sliding down a touch. It's at 48.62 to the greenback. That is a depreciation of a little less than 1%. Now, this despite the fact that Finance Chief Sonny Dominguez had mentioned that yesterday we felt a boost in the peso because of the nation's balance of payments surplus and also a mild inflation environment. So he made these comments yesterday. Now, nevertheless, I do want to take a quick peek at how our local markets are doing, whether we are following course of the rest of Asia, which had been in the green earlier on. Unfortunately not. We are still sitting at 5773.21. We're still down 26 points. Let's take a quick peek at who are our leaders and laggards here. And whether we have reverse course from yesterday's pain, not necessarily. You can see Aboitiz Power, the best performer today, up by 1 7/10%, but very mixed picture here. You've got Jollibee in the leaderboard, Globe Telecom, DMCI. So everyone from consumer stocks to power to infrastructure to telecommunications, all in the leaderboard. But take a look at First Gen. Aboitiz on the green, First Gen in the red. Begs the question, what's going on here in the power companies? First Gen down by 3 3.3%. PLDT also complete opposite from Globe, down by 2 3/10%. So indeed a very mixed picture. Investors still digesting the impact of the GCQ on Metro Manila, and also of course the PMI index, which showed the third straight month of slowing for our manufacturing industry. And that's a first look into the business day today, September 2, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danny Laurel, and we are One News.